Hello, everyone. Welcome to episode 83 of Going Live with Good Soil. This is, these are good weeks. Tesla's been coming back up, getting close to 200 here. I think it's been a nice ride the last month or so for anyone who's stuck it out with Tesla. We'll talk a lot about Tesla on this live stream, and we'll just go through our normal outline like we normally do, macro market stuff, and then Tesla and Elon, and then any notes on other stocks we cover and talk about in Q&A. So, Matt, how's things going for you? Are you what do you think about the markets and what's going on with the macro market and such?
Yeah, it's obviously been good news. I mean, I think we touched on it last week too, that the kind of prospect of a soft landing seems to be reemerging as at least a possibility, where
Hmm.
it seemed like that was not a possibility just a couple months ago. So yeah, that's kind of encouraging. At the same time, Tesla's rise has been highly correlated with some of the meme stocks and like GameStop and Bitcoin and a few other things that are traditionally like high risk and certainly crashed real hard on the way down. So you don't want to read too much into that, but it's been kind of nice to see some stabilization around this 190 range and not just like continuing vertical up like 10% a day for 2 weeks
Yeah,
straight. So yeah, it's
yeah.
it's probably healthy to take a little bit of a breather here. But I don't know what's your thoughts on we had this jobs report come through on Friday, which was good news, and sometimes good news is bad news in macro.
Yeah,
So
yeah.
what's your prognostication on kind of what's going on in macro right now?
I mean, I think the market was ready just to like pounce on a bull market again, like kind of recover, and just money going back into equities after the Fed's decision and Powell's press conference last week, and so we started to see that. But then the jobs report Friday kind of threw a lot of cold water and I think put a big hesitation in that kind of movement because people are like, oh, whoa, what was this number? It doesn't fit with the narrative that, the Fed will pause soon because, the jobs market was so surprisingly good, and so the recession, we're not close to a recession or, there's inflation more likely on the horizon. So the Fed's going to keep, they have more wiggle room to push rates higher as well. So it's just, I hate being such a macroeconomic observer
Same,
or
yeah.
strategist, and reading into it. It's just a real lesson for us of humility here because it's hard to predict the macro market. I mean, Elon said in his earnings call that he thinks it's probable that there's going to be a bad recession, right? And he's like the oracle. We talked about
Mhm.
that last week. But then the Fed is the CPI prints and the data, suggest that maybe the recession is going to be maybe it's going to be a soft landing, like you were just saying. So yeah, I don't know. I mean, what if the CPI print? There's two more CPI prints before the next Fed meeting. What if they're still kind of like flat or even they go negative? And it's deflationary. I'm thinking, what is I haven't really thought this through. I need to pontificate it more. But what if we're on like a deflationary trend, but jobs are great, and the economy's not in a recession, but we're in a deflationary, like the Fed wants price stability. They want to target 2% inflation, not deflation. So I would think they have to lower rates if we're in a deflationary trend, I would think. I mean, have you thought that through much? I mean, if the economy's humming, but we're in deflation, what is the Fed going to do? What do you think?
Yeah, I mean, I think in that case they probably would have to cut rates. I hesitate to speculate on the timing of that. There's the kind of debt markets are making some presumptions around
Hmm.
I think a decrease this year at least. I forget the exact amount of the decrease that's being priced in with the yield curve, but
Hmm.
markets are very clearly expecting rate cuts. But given how Powell's language has been lately, it wouldn't surprise me if they leave rates too high for too long, even if we get signs of not just disinflation but deflation, where the rates actually go negative for a bit.
Hmm.
So yeah, it's certainly possible. But overall, like the strong economic data, The risk of it is, of course, that it can lead to, continuing purchase pressure and therefore like price pressure, which will make, inflation a bigger boogeyman for longer. And maybe we need even more aggressive rate cuts or rate hikes down the road. That's the risk with the good, economic data that we've been seeing consistently. But the potential upside is you might have this Goldilocks situation like you were talking, where, Fed is kind of forced to cut rates because deflation is happening, and like employment data is good, people are still spending. Probably my biggest single concern or point against this Goldilocks scenario is like consumer debt is way too high right now. Like there's a lot of credit card spending. There's a lot of people living paycheck to paycheck, so it seems like something's going to give in that scenario. So I would say it's more likely, if I'm trying to like gauge what's the likelihood of continued inflation versus Goldilocks versus recession, it seems most likely to me of three scenarios: consumer spending really drops, and then we've got some sort of recession type situation, which leads to kind of economic pressure, but then rates will probably get cut.
Yeah. I mean, it seems logical. I think Powell is going to be speaking in a couple minutes, so we'll see if he's kind of how he changes his tone based on the new data of the jobs report since his press conference last week. I think it was Wednesday. So yeah, we'll see how that goes, and we'll see the market reacting live probably during our live stream. So we won't be listening obviously while we're talking, but we'll see how the market's reacting. I see someone Zoom in the comments. The Fed, they want to see disinflation, not deflation. I agree with that, and they would cut rates long before we see deflation. I think the question is deflation officially, the trailing 12-month? Is that what they're looking at for deflation? Or are they looking over month for several months in a row being deflationary, even though the average still would be inflationary or disinflationary? So I think that's sort of the rub is, are we defining inflation and deflation as like the annual metric, which is month over month averaged for the last 12 months, which I think is obsolete at this point with this kind of COVID, inflationary shock we had. It wasn't like something that happened over years. It just happened in 1 year, so I think you got to go look at the month over month, maybe the 3-month trailing month over month or something. So we'll see how the Fed, interprets that data coming up, because the CPI prints for the, next week and the one the month after, those are critical for what the Fed's going to do in the next couple meetings, or the next meeting might be the last 25 basis. If it's disinflationary or deflationary for the next two CPI prints, like negative 0.1, negative 0.2%, I could see them not cutting rates at all in the March meeting. But
not raising rates, you mean?
Not raising rates at all. Yeah. Just keeping it at where it is and be like, yeah, we're going to wait to see where the CPI, the next data comes before we decide if we're going to raise it again, So that would be very bullish for the market if that happens. So the CPI prints are like the key thing, I think, for the macro market. That's my guess at this point.
Yeah.
The next two.
Yeah, no, I agree with you. And I do think the Fed is probably more likely weighting the kind of year over year figures. Because there is, to be fair, a little bit of seasonality with a lot of stuff. Like auto sales are notoriously seasonal. A lot of other parts of the economy are somewhat seasonal as well. So, I think if we get three kind of deflationary or disinflationary CPI prints back to back to back, that's probably not going to be enough for the Fed to cut rates. Maybe it would allow them to be in a position to just pause. Yeah, but I think you're going to need 6 months or more of kind of solid proof that things are not that inflation is like dead.
Negative.
And then maybe the Fed could start. I think even
cutting.
Flat, and they might consider decreasing rates a little bit, but because Flat is still below their 2% goal. So, they could be in a situation where they want to kind of stimulate a little bit, especially if the economy is veering towards recession.
My hunch on the deflationary kind of bounce back we've seen, the disinflationary bounce back of the CPI, maybe soon to be in deflation. We're speculating here. is it sort of do you think it's a natural kind of bounce back from like just a hyperinflationary shock from the last year? Or do you think it's also in combination with, immense productivity gains going on in the economy from technology and innovation, sort of like ARK Investment, kind of their thesis is, do you think this is sort of playing out in it as well? What do you think? What's your hunch? Do you think it's
Yeah.
both, or do you think it's one more than the other?
Yeah, so I think it's probably the former more than the latter. Like ARK's
Hmm.
kind of technology leads to deflation. I think that's going to be true and accelerating in like the second half of this decade.
Hmm.
Um, but like, Chat GPT is not killing anybody's jobs right now. It's probably making them a little bit more efficient, like some coders here and there.
Hmm.
So like that, it's like very marginal
It hasn't really
improvements and
played into the
overall.
month-over-month CPIs yet. Yeah.
Oh, sure,
Yeah.
yeah. Like
It's got
Chat GPT
a
is not a
year, few
deflationary
quarters at
force.
least before that
But
does.
like
Yeah.
like that's clearly like if you're a computer coder, I've heard from a lot of people that that's a great tool to actually just help you do your job more efficiently. And I'm sure there's lots of other applications where that's the case. And it's not just AI that is a deflationary force. There's lots of kind of productivity improvements and frankly just like managerial decisions. Look at what Elon has done at Twitter. Like if you look at the labor productivity of Twitter.
Just so you know, real quick, Powell is speaking as we talk right now, and the markets are really gyrating
Whoa,
kind of crazily. The
yes they
Nasdaq
are.
wants to go up. The Nasdaq wants to go up. Looks like it. Whatever he's saying, I have it on mute, but keep going. Sorry, I didn't mean to interrupt you. We'll see. I'll interrupt if
We'll keep
something
an eye
major
on that.
happens. It's just gyrating back and forth. There is no direction yet, but keep going.
Yeah. So, I guess my point is like, I'm sure, I think there are kind of incremental productivity gains just from companies being, efficient with fewer workers. All the tech layoffs that have happened in the last 12 months, like those are clearly increasing productivity of those companies. But I think
That's true.
probably the bigger thing in my mind is just like the supply shocks that have been going up or that we've been dealing with since COVID. I mean, the $10,000 cargo containers that we were talking about a couple months ago. It takes a long time for those to like work their way through every single stage of the supply chain. So, I think that those kind of one-time shocks and then the huge commodity run up that we saw, and then now it's finally falling back down. Like I think those were probably much more drivers of like inflation than kind of like the bigger macro trend theme of like technology leading to
Yeah.
innovations or to deflation.
Yeah.
I don't know. Do you have a
So just
thought?
transition us to the next. Not really. I think
Ooh,
we've gone over a lot. Just transition to the next Tesla. Tesla
Tesla's a
has been,
195.
yeah, it's been outperforming the market. It's not outperforming the market yet today. I mean, the Nasdaq's up 1.25%, and Tesla's like flat hardly. It's pretty much flat. It's coming up now. The whole Nasdaq's really zipping up from whatever Powell is saying, which is, I think Powell's just confirming they're going to do more interest rates hikes. But I think the market was anticipating, like, what if he's going to say something more drastic, like they might go up 50 basis points in the next meeting or something. If he says something like that, then we need to be prepared and hedge ourselves. So I wonder if that's how the macro market has been the last couple of days, but it's been down. And now that Powell is just sort of, I think, reconfirming, a lot of the hawkishness that he already said. He's basically admitting disinflation is happening, but it still has a long way to go. So he's staying hawkish on it, conservative. He's not being dovish, but he's not adding new hawkishness, new material hawkishness is my understanding. And so maybe for that reason, the macro market's like exhaling and like, okay, we can breathe again, and we can cover our shorts or hedges or whatever. That's sort of my guess about what the macro market is doing if I had to put a narrative on it.
Yeah, I'm curious to see his comments after this. So
Yeah, I'm just reading the highlights here and there on Bloomberg. They say, Powell says probably need to do further interest rate increases. Of course, he's going to say that. He's not going to. He's already been saying that, so he's just reiterating the stuff they're saying. And
yeah,
that
yeah.
disinflationary has a long way to go. Those are the main points. I'll let you know if I notice anything different. But the market seems to be coming back with some of what it gave up the last couple of days, Friday and yesterday. So anyway, Tesla, the stock, I mean, it's been on fire. It's outperformed the market majorly. I mean, on Friday, I think Tesla was up a little bit and the markets were down. And then yesterday, Tesla was up 2 or 3% and the market was flat for the most part. So Tesla has been outperforming. It's been going up this on days the last few week or so, even when the Nasdaq is flat or down. So that's been great. Today was the first day Tesla was even down, I think at all really meaningfully, and the Nasdaq was flat or up, slightly. So,
Yeah.
I mean,
And
I'm
now it's
excited
back
about this
0.5%.
outperformance.
So
Yeah, it's
that's,
back up 0.5%, 195. I mean, I think the consolidation has been happening the last few days, and I wouldn't be surprised if we're up another 10 or 20% in the next couple of weeks leading up to, Investor Day on March 1st. That's my
yeah.
50-50, you know,
Not
line.
investment advice, obviously,
No,
but
not investment
I
advice.
feel
None
like
of this is investment advice. We
we
should say
always
at the
just put that
beginning of the
out there. I know.
conversation. Yeah.
But Gary Black was saying something similar in a tweet, and there it's not uncommon for there to be a run up ahead
Yeah.
of a Tesla event like that.
But it is very
But
common for Tesla to tank 10% after an event. So everyone be aware
it's
of that.
true.
Please be aware. It's very common. Okay. Yeah.
It's very true.
Yeah.
It does seem to be the case that a lot of the trends have broken in the last couple of years. For the longest time, probably 3 years in a row, it seemed that Tesla would always run up into earnings and then kind of tank immediately afterwards, even if the earnings were a blowout. But in the
Yeah.
last, I don't know, 3 or 4 earnings that that scenario has not played out. So a lot of the trends that seem to have been the case for 4 or 5 years now, I'm just not putting that much weight into them anymore. You just so much is changing. But yeah, I mean, it wouldn't surprise me. I think 200 is maybe we consolidate around here for a while, but yeah, it wouldn't surprise me if we run up to 225,
Yeah.
230, something like that. Another 10, 20%.
Yeah.
But it's just been
Powell saying need policy at restrictive level for a period of time. So he's just reiterating that. But we think if there's deflation, they can't keep it for a period of time. They're gonna, and that the market really thinks they're gonna lower rates by the end of the year too. The dot plot is showing that.
yeah.
Anyway, sorry, go on. I'm
Well,
just
I
giving an
think that's
update on what
consistent.
Powell's saying. He's
I
just
think that's consistent
reiterating his
with what we
message.
were saying before. They're going to need 6 months of proof of disinflation before they do anything else. So
Yeah.
maybe if they get 4 months of disinflation, then they don't raise because that's new data, but a little bit longer before they actually start cutting. So yeah,
Yeah.
that's not surprising. He's saying the things that I would expect him to say. He's not overly hawkish or overly dovish. It sounds like from those couple points, which is definitely good to see. But yeah,
Yeah,
I'm
and they're
curious
not.
about this.
He was asked about changing if they're going to change their 2% inflation target, and he said they're not going to change that. I'm just giving you bullet points since we were on that.
Okay.
And he expects 2023 to be the year of significant inflation decline. So they're expecting inflation to be in significant decline this year. That's got to be good for stocks when he says that.
Yeah,
So
I
they're
would
not
think so.
expecting it. They're not still expecting inflation to stay high, which means they're expecting to come down, so they're expecting that. Yeah. Okay. Anyway, sorry. I'll tell you if anything notable comes up, but let's talk about Tesla. That's what people are
Yeah.
here for
So
us.
I wanted to ask you about Investor Day. It's kind of been out there for a month now. We've got this thing on March 1st. What do you think this really will be a catalyst? How big of a deal do you think this is? Because there are a lot of events that it's like an update, and it's not anything that we haven't heard before. I kind of get the sense that there might be some pretty significant new details of either strategy or master plan part 3 or Highland, like new information. But what's your take on how big of a deal is this going to be?
I think for long-term investors, it's going to be a really big deal. I think for short-term speculators, it might be a big bubble,
Mm-hmm.
just like we were saying, these events typically, Battery Day was an example, right? It's like, I remember Battery Day very vividly. I was there. It was the beginning of COVID, and everyone's in their cars, and they give this big presentation. I'm a long-term investor, but I also had a lot of Tesla options, so it's like kind of bittersweet long-term options, of course. So, but I'm also a long-term. I have a huge pool of long-term stock, but I want the options to do well too, obviously. And they gave this great presentation about how they're going to, produce X amount of batteries and do all these things. And they're already working on it. And then I'm watching the stock in the after hours go down like 5 or 10%. It was just like, oh, that really hurt because there was so much buildup going into the Battery Day, I remember. So, but that's different. That was like a specific technology. This is Investor Day. So I don't know what they're going to tout so much. Master Plan Part 3 is my hunch. Also, hopefully maybe they unveil this Project Highlander. Is that what it's called? Highlander?
Highland.
Yeah, Project Highland. Maybe they unveil that and show the Cybertruck. They do a few things around the technology as well, not just talk about investment stuff. So I think there could be some surprises there. The Project Highland could be like, look, we have the new Model 3 we can produce for 30% less, and we're going to sell it for $5,000 less. And it's even better, like maybe it'll be like something like that. Like that's my dream is if they, it's not exciting from a technology point of view. If you're like, oh, just a cooler looking Model 3. That's kind of cool. But from an investor point of view, that would be like amazing, like that
Yeah.
would be like the best possible thing for like Ron Barron or anyone who's like financially numbers like you, probably the margins, you're probably salivating thinking about it, but from like a technology guy, I'm like, oh, okay, cool. A little bit of a cooler Model 3. That's neat, but the stock I think would go wild if they show that off. And, that's my hope for the stock price would be, I think that could be a material increase in the stock price if they announce that. What do you think?
Yeah, I mean, I think that would be a big one. I mean, I think one of the things the market has been concerned about, is kind of like the Drew Dixon thesis of you don't have enough models, and then the Model Y has cannibalized the Model 3 to some extent. The margins on the Model 3 are not that great anyways, especially out of Fremont.
Yeah.
Well, out of Fremont. So if they've got some, kind of refresh of the Model 3 with a lot, with potential cost improvements, that's really good news for margin. So yeah, like the finance nerds like me and Ron Barron are going to love that. And Tesla's
Yeah.
rallying here now. I'm sure that the rest
Yeah.
of the market is too, but
197.
197.
Well, yeah, the whole NASDAQ is riling up almost 2% now. The NASDAQ is getting close to it. So everyone who, this is also a thing I see, Harry Chu, I like Harry, I like you. I see you in the comments. He's saying 198 is resistance. That's like a technical analysis type term, resistance, be careful about those technical analysis things because right now the movement of Tesla is clearly just based on the macro market. There's no resistance momentum inherent in Tesla stock itself at the moment, right? It's clearly the direction of Tesla is, if you overlap it with the NASDAQ, is just doing what the NASDAQ is doing, So, if the NASDAQ, if you want to say the NASDAQ has resistance, at a certain level, that's one thing, but I still don't believe in that. But, there is no real meaningful like resistance level at the moment in Tesla in my mind. It's just following whatever the NASDAQ is doing, today, the last hour or half hour. So anyway, if the NASDAQ continues to rally, 2%, right now it's up 1.8%, something like that. I see that on the Qs. If it goes up to like 2 or 3%, I mean, Tesla's clearly in my mind going to be above 200 if it gets to like, so that'll be psychologically a good thing if it can close above 200. I think it'll help.
Yeah, that's a big
though.
Psychological number. I'm sure there's a lot of open interest in strike prices of 200 at a lot of different maturities too. So that can be a pretty impactful move. So
yeah.
But I never thought it should have hit 200 in the first place. So I was so surprised that we went so far down. So it's like
I mean, we might be back above 200 and be like, we never should have been below 200 to begin with. Some people are like, oh, 200. Oh my gosh, up too fast, too soon. But yeah, I mean, we'll look back and be like, remember when Tesla was below 200 and you could buy it for close to 100 and you could have got it and held, and some people did. And some people bought it. We know some people that bought it around 100, around the lows and sold it, very recently. So, I feel like maybe they're happy with their 80% gain on a few weeks, I guess, but they could have been much more if they held on to it.
Yeah, I think that's the case. The kind of price and margin concerns were really driving the whole narrative, and there were some people saying that, like Tesla's demand is completely dried up, and then like they're gonna not sell as many cars, and the ones that they do are not going to be at good margins. So I really think Zach's comments are specifically around like specific numbers for margin on the last call were really helpful for kind of alleviating some of the worst case scenarios that like, oh, Tesla's earnings are going to drop by 50% in 2023. Like that's not the case. If you believe the numbers that Zach mentioned on the call, then it's pretty much impossible for those kind of scenarios to pan out. Unless their internal forecasts are wrong, but I'm guessing they're a lot more accurate than ours.
Yeah, Absolutely. So the IRA, the other thing, let's talk about Tesla. I mean, the IRA Inflation Reduction Act guidelines were adjusted to include all Model Ys. That was kind of really, it was a month too late because Tesla did not need to probably reduce their prices if they had just done that a month ago.
Yeah.
But Tesla had reduced their prices, and now Tesla is increasing prices for the Model Y, what, $1,500, I think. And there's like no inventory. It went from like 1,000 Model Ys in inventory to like 30 Model Ys in inventory in the US or something like that. Last I looked. So, and the wait times for new Model Ys, instead of being 1 to 4 weeks, is now 4 to 13 weeks. So clearly, demand for Model Y is not an issue whatsoever. Model 3, there's question marks, and that's why I think the Project Highland is overdue. But at the current price, but Model Y, it seems pretty clear that demand is solved for the foreseeable future, right? What are your thoughts about the IRA
Yeah. So
adjustment
I thought
demand?
that was really great. The guidance that they put out just didn't make any sense. Like if you
Yeah,
just go with the third row, then you can get an extra what was the difference? $25,000 price difference to qualify for that. So
yeah,
like people were proposing some like kind of silly things like Tesla should only make like 7-seat variants, but then have like a free removal service offered at delivery if you want that, just like to let
yeah,
people qualify. So I'm really glad they didn't have to go down that path because that's just like crazy and it just would be a big pain in the butt. So the fact that the IRS changed their guidance, and it wasn't like the good thing was it wasn't political in any way because a lot of companies received this benefit. GM did. A couple other companies are going to benefit from this change guidance. Ford, yeah, with the Mach-E was in a very similar situation. So yeah, I thought that was great to see. Just that the kind of rationale for that benefit was more logical than than it had been before.
yeah,
I do think it's important to keep in mind though, we like the March, I think it's either March 1st or March 31st. I think it's March 31st. There's a potential that this could get cut in half depending on like qualifying materials portion of this rule. So that's something to keep in mind that the benefit could be reduced significantly depending on the IRS guidance on that. So that's something to keep an eye on for demand in the latter part of this year. But for right now, I do think that Tesla will qualify, but you just don't know until the guidance cocomes out. So
yeah. Do you think the other card companies like Ford or whoever else selling EVs in the U.S. is also going to get I would assume they have the same issue as Tesla if that happens, and they're going to give half the rebate as well going forward after March 31st. Is that right, or are some of the other like?
yeah, so I'm not completely sure about like the qualifications or where every company is making their site. Like, isn't the Mach-E, I think, is made in Mexico, if I'm not mistaken? I could be wrong
Yeah,
on
that's what
that.
I thought. Yeah,
Um,
they're trying to
so
build
I
it somewhere in the Carolinas, but right now in Mexico or something. Yeah.
Yeah, so I don't know the details of like the domestic content. Like it could be the case that they're sourcing enough stuff domestically, even though it's assembled in Mexico, that they may still qualify. I don't know, but I think overall Tesla's in a pretty good spot considering how much stuff they do here domestically. So overall, I just think it's good for EVs. Like I don't think Tesla needs to crush the Mach-E in order to be successful. I think EV needs to continue to gain market share from ICE vehicles. So I think that trend is likely to continue and accelerate. So we're definitely, I think, overall in a good spot as a result of this, guidance from the IRS.
Yeah. So that's exciting for Tesla demand. Not a worry in the U.S. anymore for a while, especially if the economy's kind of recovering well and not in a major recession. It's just has a soft landing of the economy. It's just I don't see a problem with demand even with capacity expanding drastically as it will with Model Ys. Accelerating the production ramp at Giga Texas for Model Ys
Yeah.
being accelerated this year.
Oh, and I do see in the comments too, DRK says that Mexico is part of the free trade zone. So I did forget about
Oh,
that part of it. Yeah. So that's like, there is that like most favored nation, like free trade zone component of this. So I do think that's right that like all these other, like the agreements, the countries with which we have those agreements, will all be treated the same. It's kind of like that most favored nation clause in trade. So I think that I'm not expecting any kind of like strategic benefit for Tesla, but it does seem that they're probably most likely to benefit from this. I would guess, but
Yeah.
take that with a huge grain of salt because I've not studied the language on that part in great detail. And even if I did,
Yeah.
I don't think you could understand exactly where Tesla's sourcing everything from.
Yeah. All right. Looks like the Nasdaq's kind of coming back down a little bit. Tesla's coming back down. Powell said further rate hikes needed with strong labor market. So he's sort of commenting that more rate hikes are needed because of a strong market. So he's just commenting on that data, I guess. So
This
we'll
is
see
our
what happens.
ADD version of going live with Good Soil. Every 2 minutes, we're checking on Powell or the stock price or both.
Yeah. All right. So the next thing is Elon, the jury decision of the 420 tweet. What a joke it was to have that trial even happen. I mean, I'm it's such a pain to see Elon have to waste his time to do all that, but I'm glad he did. I guess he's just sticking to his guns. Like he's not going to settle for ridiculous lawsuits. He shouldn't have settled for the original SEC, case against him. But he just thought the risk was too great for Tesla's survival at the time. And so that was basically the same lawsuit, right? Wasn't it back then when he settled with SEC to like take himself off chairman and have his tweets like read by other people or something, I think, and pay like
Yeah.
some nominal fine. That was like the same lawsuit brought against him, but he settled because he just didn't want to take the chance of, Tesla was in dire, economic condition and would probably needs to raise capital again soon. And there's all these rules about being able to raise capital if you're under investigation and all this stuff. So he felt like he had to. And I know that's always been something he's regretted to some degree. And so now he stood up for himself on this and easily won the court case. Unanimous decision by the jury within like an hour. When the jury decides. I mean, it was surprising based on the media coverage, right? But when the jury decides in an hour unanimously, it's clear that it was an obvious case for people who can see all the information, who are given all the information by lawyers on both sides. If they decide within unanimously very quickly that one side, then it's a clear cut decision. It's a clear cut thing. It shouldn't have been a surprise, is what I'm saying. Like, it shouldn't have felt like a surprise because the media just spins this stuff out of control and makes us all feel like uncertain about it or just for clickbaits. It's just so frustrating how the media covers this stuff.
And I really was uncertain about it. Like it's not one of the cases that I studied very closely, to be honest with you. It didn't seem like it was going to be super material either way. But just on Twitter, people were so convinced that like Elon was going to lose. Like Brad Munchin, I was kind of following some of the stuff that he put out on it, and then other people were saying like, no, like this, he's got a really strong case, and even if he does lose, like there's not going to be an impact to Tesla. So I didn't really know what to think, but it is just so funny that some people like Brad out there had such like were convinced, like overwhelmingly convinced that like this was gonna like fall against Elon and that he was making a joke of himself in court and like all this stuff. And it's like, no, like even in San Francisco, which, certainly has a reputation for being, very liberal. And, Elon has done a lot of the things which would presumably make some San Franciscans. How is it? San Franciscoans? Is it San Franciscans?
I don't know. Something like that. Maybe.
Upset. And so the fact that the jury came out so quickly and in his favor I thought that was pretty eye opening.
What it is there's these people, whether it's Brad or Tweetermeyer, I forgot the guy's name, or some of the other people that feel so opinionated against Elon that they can seem well informed, right? They seem well informed because they talk in a smart way and they have experience of whatever industry it is, whether it's the automotive industry. But they're just so biased and opinionated already. You just can't trust them whatsoever. Like no matter how smart they seem. And so it's not a jury evaluating these people, evaluating these commentators, because if it was a jury evaluating Brad Munchin and Tweetermeyer versus us in the Tesla Twitterverse, it would be like, oh, who are they going to believe? Right. But thankfully, the jury goes on the source of the information, the source of the issue, the actual source. Like,
Yeah.
what did Elon say specifically at what time? What happened behind the scenes to make him say that? Like, what is the source of his meeting with the Saudi Arabia? Who was on the ground in that meeting and what are they saying about it? Who lost money and how did they lose money exactly? Like, so you get to the source of it. And then when you have the source information, it's an easy decision. But too many people just don't look at the source. They just go on what commentators are saying. They form their opinions because they see all these commentators. And it's just, that's there's a lot of, uninformed. There's a lot of mistakes made because of that in investing too. Yeah. So it's tricky.
Yeah, yeah, it is. It's so true. Like people get this confirmation bias. Like there was this Tesla bear account that I started following because they had a really accurate number or estimate for the deliveries in Q4, which a lot of the bulls missed. And so I was like, oh, this guy might have like some interesting counter opinion. So I started following him, and then all of his tweets since then were just like, oh, Tesla's going to crash down to $65 by next week. Like, better watch out. And then like every day it's just like, oh, the bulls are laughing, but like now Tesla's going to be dropping. I wouldn't be surprised if it closed at 145 tomorrow. And like
Yeah.
all these, just like, what are you basing this off of? So it's just interesting. Like you can, even a broken clock is right, twice a day. So I think it's a little bit of this stuff where like the Bears can point to some stuff that they've been right on, but like the future prognostications are just like kind of crazy the more I dig into them.
Yeah.
So
Yeah. It's just a weird phenomenon that people believe, make decisions based on, commentators more than this examining the source themselves. I feel like it just happens too frequently. We trust the media, we trust other people, and yeah.
do we still trust the media? I don't know if we trust the media anymore.
We say we don't, but I think we're conditioned since we're young to like trust it as an authoritative voice for some reason, so we say consciously we know we shouldn't, and we try not to, but it's hard to unlearn that trust. It's so hard because you've grown up with it, and it's wild. So it's not to say the media is always wrong. They could be right, but you just can't trust it. You just don't know. You have to verify stuff yourself. Trust but verify. That's like the quote from some politicians. I think Reagan or someone said that. So, all right. So the other thing Elon mentioned on Twitter, some Twitter changes, like there was this private account issue. I made my account private for like the last 5 or 6 days, but I couldn't set up this Twitter Spaces without taking it off private. So I had to take it off private and just set up this Twitter Spaces. But for 5 or 6 days, my account had a little lock next to it, and every time I tweeted something new, it did get a lot more exposure, like a lot more views, a lot more interactions. People would tweet, be like, I see your tweets now. Like people that didn't see my tweets ever before, even though they followed me, they're like, I see your tweets. So there is some weird bug going on. I didn't get really many new followers, but you have to approve every new follower. So maybe it's not getting exposed as much to a new audience that doesn't know me already, but my existing followers, only a small portion are seeing my tweets, or half of them, or I don't know what the proportion is, but a smaller portion of them are seeing my tweets than if my account was private. So there's like a pros and cons, I guess, but it definitely seems like a bug. Elon says he's investigating it. I'm undecided if I'm going to make my account private or not. Again, I don't know. It's just pros and cons. It just seems odd, right? I mean, have you tested that at all?
No, I saw a bunch of people were testing that, and I was like, I'll let them do that and let me know if I should change anything. But no, I just left it alone.
Yeah. I'm indifferent. It's not a big material thing. I'll probably just leave it on private. But the other big thing is they're starting to share advertising revenue with tweets, where in the replies thread there's advertising shown. Then they're going to share that advertising with the person who made the tweet. Did I read that right? Am I understanding that correct?
Yeah, so I didn't see the exact details of how it's going to work, but yeah, it seems like there will be this new mechanism for sharing the advertising dollars. You do need to kind of set up your account for monetization, so you need to opt into that. It's not like you're just gonna have a check show up at your house randomly, but it does seem like that's going to be really good in kind of incentivizing people to actually like promote more engagement on Twitter. So, I think it'll be a while before we see that really, paying off. I think a lot of the stuff that Elon's doing is he's like laying the foundation for Twitter to be very successful in the long term. But It's like the MrBeast had some really good comments on this, that he just gets so much more exposure on YouTube that like to try to have like Twitter replicate the stuff that he's already doing over there may not be the best, kind of use of his time. So I don't know. I'm kind of curious to see how this pans out, but it's definitely a step in the right direction, I think, of kind of trying to incentivize better quality content on Twitter instead of just like a bunch of people yelling at each other about how dumb they are.
Yeah. Yeah, exactly. I see Martin in the comments says, Mr. Beast, the CEO of Twitter or not, still has that in his profile. If it's a joke, it's a bad joke at this point. Yeah, I mean, Mr. Beast did actually reply to that tweet by Elon as well, saying how excited he was for this, advertising revenue share as well. So I do feel like there is some role Mr. Beast might be having, something more than just a content provider, maybe something a little more formal with Twitter and Elon. Maybe he's just a trusted advisor for Elon at this point. I'm not sure, but I feel like there's more than him just being Elon's friend and trying to, tweet once in a while, a little more often. We'll find out. Time will tell. But I do feel like there's going to be more to the story with Mr. Beast and Twitter. What do you
Yeah,
think,
I,
Matt?
I agree. I don't know exactly what it's going to be, but like they were clearly in communications. Mr. Beast clearly has insights that I think would be valuable for Elon. So whether
Yeah.
he's like the optional CEO, to me, that doesn't necessarily make sense. But I think he's going to have some kind of role in maybe shaping like the strategy, like the content creator strategy or something like that. To me, that'd be a role he'd be incredibly well suited for. So I'm curious to see where this goes. But I think it's a good thing that Mr. Beast is so excited because he's got such a huge reach.
Yeah. Yeah. And I guess before we go into Q&A, just a quick update: the FOMC or the Powell has been, I guess, whatever he's been saying about the markets, digested more recently. The most recent comments is not quite as dovish. The Nasdaq has come down from up about 2% to up about 1% now, and Tesla gave back all of its gain to be, pretty much flat, down $1 again. So basically where it all started, it was a lot of fun for 10 minutes or 30 minutes there to see the market go up, Tesla go up 3% really quickly and then back down. So yeah, I guess we'll just see what the next data is for the CPIs and such. But it doesn't seem like Powell is saying anything new that's going to make the market kind of go up further than it already has, which has already gone up. Nasdaq's up 1%. It was sort of flat earlier today. I think maybe it was up a little bit, but Tesla's been flat. Yeah. All right. So why don't we go to Q&A? We got about 15 or 20 minutes for Q&A here. First question from Tommaso Gritty on Twitter. At Good Soil Investment, you have been long Rocket Lab for a while. Any chance you could give us an update of your valuation model in Tuesdays, for today? Yeah, Rocket Lab. I saw you comment, Matt, with Ashley Vance. He's doing a new book coming out where he followed Rocket Lab closely. So we're curious to see what he writes about Peter Beck and Rocket Lab for sure. Any thoughts on the valuation model, Matt? I mean, you're kind of our valuations guy. My thesis is sort of Rocket Lab investors will gain interest, at some point in the future. It's sort of like venture capital play in a way, but in the public markets, and you just have to hold it for a long time until it gets enough investors' attention, and the next kind of wave of attention, I think, will come because of Starlink's discussion of an IPO maybe later this year or next year, I would imagine, if not this year. That's my kind of thesis personally, but I know, Matt, you've looked at the numbers a little more probably, right?
Well, yeah, but I do think at this stage of the company's life cycle, I mean they're not profitable yet. They've got a long way to go, and they're developing the kind of next generation of their rocket, the Neutron, which is going to then enable the next phase of their business, life cycle, which is developing some types of like Earth-based constellations similar to Starlink. So doing a pure valuation on when all those things happen and like when is that inflection point where they kind of flip the switch on earnings, it's very hard to forecast that out in a model. So yeah, we do have our valuation model, but I for this a company in this stage, I do think that the kind of softer aspects of it are probably what's more important. So I do think like the Starlink IPO could be a catalyst because it can get people to start thinking about this. I mean, one of the things we've been saying for a while about Rocket Lab and the space industry in general is that the space industry is misunderstood. I mean, the fact that the whole market cap of the industry is basically like SpaceX at 150 billion plus like maybe $10 billion of other companies like scattered throughout. That doesn't make any sense to me. Like the number, like it can't be one company is like 95% of the total market cap of the industry. That just doesn't make any sense. And it also doesn't make any sense that you got like Virgin Galactic, which has a business model that can't scale, is basically at a very similar valuation to Rocket Lab. I think they're a little bit lower now, but like space tourism at the price tags that Virgin Galactic will be capable of at scale just doesn't make any sense, especially if you believe that SpaceX is going to figure out Starship, which will be able to do a much better experience drastically cheaper. So, I think there's just like this is a new industry. People don't know how to value it, and they don't know how to assess which companies will actually be winners. And so Rocket Lab is the only company other than SpaceX which actually has a long history of successful launches, which is one of the most important things that satellite operators look at when choosing a provider. So the whole industry is nascent. I think valuations are going to rise. I think this is an all boats rise kind of industry, but I think there's going to be relative winners and losers even within that rising tide. But it's just going to take some time for the market to kind of sort out which is which. But I think we're still more convinced than ever that Rocket Lab's going to be one of the winners.
Yeah. And Larry makes a good point in the comments. He says at this point, he doubts SpaceX is making a profit yet, I agree. And that they have a $140 billion valuation, so even though Rocket Lab's not making a profit and probably a ways off from making a profit, their fundamental technology, we think should be worth more than 2 billion. 140 billion SpaceX, Rocket Lab 2 billion. Like that's crazy. It's like 1.5% of the valuation of SpaceX for a company that's able to, the only other company proven to be able to send things to lower Earth orbit. So I think it should be like 10%. Whatever, 10% of SpaceX. Why not? Like, why can't it be 10%? 5% even. I don't know. Like, it just seems like sooner or later. And the other space companies, like you mentioned, Matt, Virgin Galactic, and what are the
Virgin
others?
Orbit,
Ad Astra or whatever.
There's Astra, there's
all these companies that don't send things to the one that Chamath was talking about. That's a private company on his All In podcast. None of these companies are able to send things to lower Earth orbit, and if they do, it's like one lucky attempt, and it's half right, half wrong. And they haven't done it again since. And so, I mean, all those other companies should be worth 1% of Rocket Lab. Then they shouldn't be worth 50 to 100% of what Rocket Lab is worth.
Yeah, Blue Origin, Larry says as well. Larry has another good comment in the comment section that he can't see launch providers making profits. There has to be something else in the business model. I think that's exactly right. And Peter Beck has had that in the business plan from the beginning, that, like the first step is to build like a fully integrated, vertically integrated rocket launch company so that you can get to the point where you're providing Earth-based services. And so this is what we've been saying from the beginning, that like SpaceX's mission is to build a vertically integrated launch services company so that they can colonize Mars. Rocket Labs is to build a vertically integrated launch company so that they can provide space-based services to Earth. So they've got like very similar strategies and missions, but they're targeting different endpoints. So like there is going to be so much room to grow, I think, in these kind of like Earth-based constellations that provide services back to Earth. But like Rocket Lab is so much further away from actually launching that part of the business. So of course you've got to apply like a valuation discount to it. But to your point, Emmett, like why not 5% of SpaceX's market cap? Like to me, there's a lot of room to grow to the upside once they I think have a little bit more credibility in what the long-term plan is, which they've talked about it in generalities, but not in kind of specific areas they want to target. So I'm bullish, but this is going to be one that takes 5 or more years to really play out, I think.
Yeah, I mean, what's Rivian's Rivian's current valuation? For example, just Rivian's current valuation is 17 billion. Is that, what percentage of that is that of Tesla's? I'm just curious. That's like it's probably like 5% or
3%, 5%, somewhere in
Okay.
that neighborhood.
Okay. So why can't Rocket Lab be 3 to 5% of SpaceX's? I don't know. It just seems like, it's very different industries, apples to oranges. But I'm just saying you got to compare market caps to try to make sense of long-term stock prices, in my opinion. And
Well,
yeah.
it is, but I think and we've probably been on this point a little bit too long, but one of the
Yeah.
things that kind of is such a big difference though is like Rivian has minus 100 or 200% gross margins. They've been improving lately, but they're still like they're losing a huge amount of money on every single car that they build. But Rocket Lab has had positive gross margins for a long time. They've been very disciplined in their operating expense management. So you can actually see the case where if they get their launch cadence up a lot higher and can do some stuff on the kind of other launch services, which is like half of their revenue, then they can get to a point where they've actually got like a strong financial profile with decent operating leverage. Rivian is just so far away from that point. And to your point, like they're different companies, different industries. You can't really compare them, but there's a lot to like just in the financial discipline that Rocket Lab is exhibiting relative to a lot of these other companies.
Yeah. It's a long-term stock investment, though. It's not something that you can necessarily model out for warranting a higher, stock valuation the next year or two. It could take years to play out, but at some point by the end of this decade, I think it will. But it could be a major winner, we think. So let's go to the next question here. From Bob Adams 1414 on Twitter, what do you estimate is the lag time between a Tesla Gen 3 platform announcement and volume production? I think this Project Highlander is maybe code for their whatever Gen 3. It's sort of like a hybrid Gen 3 versus a modified Model 3 platform or something like that. That's my guesstimate that, we're going to see more on Investor Day about this. And they don't want to cannibalize current Model 3 or just the Model 3 and the Model Y with announcing some, $25,000 Tesla that's, 80% as good as the $45,000 Tesla. They don't want to cannibalize the current Model 3 and Model Y demand, by announcing it too early. So I would think the time lag between the platform announcement and the volume production would be swift, would be as quick as possible. Whether that's 6 months or a year, I don't know, but it wouldn't be like 3 or 4 years like a Cybertruck. What do you think, Matt?
Yeah, that's a fair point. My gut reaction to this question was actually like 5 years, just thinking about how long it takes to like for them to do like when was the Cybertruck announced? 2019, I think. And
yeah,
that's going
November
to hit
2019.
That's going to hit volume production in, probably November of next year, when they're really at volume. So that's 5 years. And, I think a lot of the products have had similar kind of timeframes. So I don't know, but to your point, maybe they just don't announce it. Maybe they could have announced it 2 years ago, but they're still working on it. So maybe they announce it a year from now and it hits volume production 2 years later. So that's a really interesting way to think about it. And it does make sense because you don't want to Osborne your current product lineup. So, I don't know. This one I think could go anyway. I'd be like 6 months seems too short to get to volume production because even just the ramp for initial production to volume is going to be probably at least 12 months. So I don't know.
Now, do you think that Project Highland is different from the Gen 3 platform, or do you think it's similar or the same, or what do you think?
So connecting the dots had a theory which made a lot of sense to me, which was that Project Highland was the kind of Model 3 improvements, but improvements which will have a lot of the technology which will then go into the Gen 3 platform. So to me, it's like the Gen 3 is like all the newest manufacturing techniques to really drastically lower the cost of production and enable lower cost vehicles to be produced. So I think those are really two different things, but that Highland is like the precursor to, Gen 3. And the rationale for that was like the Highland was the Ford plant where they started the initial production of the Model T, and then they used all those learnings from like their first assembly line to go and build the River Rouge plant, which was like where you had like a 90% reduction in cost relative to what was the case before. So that kind of code name coupled with the history of Ford does make sense to me.
Yeah,
Given what we know about like
so it'll be a
Elon
step
has
change
essentially
in
confirmed that it's
manufacturing for the Model 3, and then they'll use that step change to help make sure Gen 3 later is kind of your speculation. Okay.
Yeah.
It's fair. Sounds about right, maybe.
We don't know, but it does seem that Highland is directly related to the Model 3. I think Elon liked a tweet that indicated that.
Yeah. Yeah. Maybe it'll include like a single die cast or something. Like he's referenced Matchbox cars. We got to make cars the way Matchbox. So I wonder if there'll be something like that. There'll be some cool manufacturing innovations, I think, for it. So we'll learn more about it maybe on Investor Day. So from Harry Chu, question: Cindy Monroe and company have said that the Tesla $25,000 EV would be a mistake, that there would be a few hundred of profit margin at best. Does this change our point of view? That's a good question. I think if in the absence of full self-driving, maybe that's true. But in Elon's mind, full self-driving is solved. It's just a matter of time. And I'm not sure that's the case in Cindy Monroe's mind, right? When he's making that decision. And most people's minds, really. So that's the difference, I think. And Elon, he thinks full self-driving is done. It's just a matter of a little bit of a few updates or something, whereas other people think it could be further out in the horizon. So that's the difference, I think, there. What do you think, Matt?
Yeah, I completely agree with that. I mean, Sandy's probably right, exactly but Elon is probably thinking, well, by the time this comes out in 2025, the full self-driving will be very close to actually enabling robo-taxis. And so then we can sell the combined hardware and software for $50,000 and we'll have a 50% gross margin or something like that. I think that's kind of the way that Elon's thinking about this. I think what he's trying to optimize is the kind of cost per mile driven to the users has got to significantly undercut the cost per mile driven for an internal combustion engine vehicle. So I think that's his goal, that he thinks these are going to be much more highly utilized, that you can afford the $25,000 of software because it's going to deliver that much more utility to the end customers, that it doesn't matter if the hardware margins are thin because you can make it all up and then some on software.
Yeah. Before I read the next question, looks like the NASDAQ has given back everything that it gained from when Powell first started speaking. He's done speaking for a little while now, but the market is digesting it all, and now it's heading down. NASDAQ is just about negative at this point. Tesla, it was almost up 2%, and now it's about to be negative. So these are kind of interesting, crazy swings just from hearing Powell speak. It's so... this macro market analysis over analyzation is unfortunately a requirement for investing right now. So Tesla's down to 190, close to 190. So just a little bit of volatility today. Nothing, just like another day of in the markets of 2023. So next question here. Just for funds, question: any thoughts and concerns on EU demand based on backlog data? Think they'll cut prices there to shore up demand? And if so, any material impact on Tesla? Yeah, I'm not sure if there's a real demand concern in the EU. I think Troy said something about that, like demand concerning, but I looked at it. I can't remember what I looked at, but when I looked at it a second time, I was like, that's not really a big concern to me right now. I think it was like the backlog of data or something, or I can't remember exactly what he was pointing out. So I'm not really, I'm not well versed on any EU demand problems or concerns right now. I guess there's a recession going on in the EU, probably worse than, much worse than what's going on here. Maybe that would be the concern, I suppose. But I'm not worried about competition or EV adoption in Europe. Any thoughts, Matt?
Yeah. I mean, I would echo all that, but I do think the prices have been more resilient in Europe than in China or the U.S. So it wouldn't
Mhm.
surprise me, especially as Berlin ramps, that they might need to cut costs or to cut prices there a bit. So yeah, I do kind of expect that to happen eventually, but I'm not sure that there's anything imminent coming out of Europe.
Yeah. All right, let's do one more question. We're just at about an hour here. From Just for Funds again, question: what are Tesla's advantages in mega packs? How differentiated are they, or how defensible is their position versus competitors for the mega packs? Matt,
Yeah,
I'll let
so
you
I
go.
guess that's my area a bit. So the advantage I think right now is just scale. Like there is not enough capacity for these batteries to satisfy the demand that's out there, and the demand is also exploding. Like if you look at the number of stationary storage projects that are in the interconnection queues, which is kind of like a good leading indicator of demand, it's like gone up 10x in 2 years, and that was before the Inflation Reduction Act kicked in. So like demand is absolutely exploding, and so I think we're in this position where there's enough demand for multiple winners. So it's not necessarily like who has the best moat or like whose product has like the best specs. It's who can like build the most stuff to deliver to customers, because there's just not enough batteries to get out there. And the other thing that I think Tesla does better than anyone else is build really large scale projects. So a lot of the other
Mhm.
competitors will do like a 2 MWh project or a 3 MWh project, but Tesla is capable of doing these like 100 MWh projects. So like or even larger. So if you're trying to do like if you're PG&E and you want to do like a large scale project, you really don't have another choice. So I think eventually you have to assume that like other industries are going to scale up or other competitors are going to scale up, and so I think price is going to come down. Like that seems like if you're going to assume that the market size increases 20x by the end of the decade, you have to assume that price will come down. But if you do that and you kind of look at the cost buildup, I think they can still have pretty healthy margins in the long term. But in the short term or in the medium term, the position is really just that like there is way more demand than there is supply right now.
Mhm.
And there are other advantages. They've got this dedicated factory, so I think margins will be improving. They're chewing through this backlog of lower priced orders. So there's a lot of things that are kind of just coming to a head right now that are going to make this a bigger opportunity. But it's not the sort of thing that where I think you need to assume Tesla has 80% market share. Like I don't think that's the right way to look at it. I think that the right way is to say, okay, like this industry is exploding, and so like every competitor should be growing 20x by the end of the decade. And if they do
Mhm.
that, then they just maintain their market share.
Yeah. Now, do you think there's going to be raw material shortages to grow mega packs like that?
Yeah, I'm concerned. I don't know if we talked about this last week, but like lithium seems to be the one that's the biggest constraint right now.
Mhm.
Nickel was a bit of a concern, but they found some kind of ways to avoid that chemistry complaint or constraint, where those nickel batteries are really being used for automotive applications and even higher end ones. So I think what Tesla's doing, I don't think they've confirmed this yet, but like they're trying to do LFP cylindrical 4680 cells, and so that's going to be a great way to kind of reduce cost and avoid some of the raw materials. But you can't get
Mhm.
around the lithium constraint. So Tesla has not announced a whole lot of details on
Unless
how they're
they
going to address
Unless
this.
later in the decade, what is it? The sodium phosphate or sodium ion or something like the batteries, isn't that gonna
Yeah,
take out
there's
lithium potentially? But that's
I
like later in the
think
decade
so, but
maybe,
that's
right?
yeah. Yeah, so the battery chemistries is not my area of forte. I'm kind of more like the commercial side of it,
Mhm.
but know enough to kind of get by. But the lithium is a very significant constraint. Even
Yeah.
to get up to the 100 GWh. So like the Giga
Yeah.
Nevada plant alone, once they're at 140 GWh, is equivalent lithium usage to 18% of the world's total mining capacity right now. So
Mhm.
more lines are coming online. Just today, there was an approval that came in through Thacker Pass, which is a really exciting new project that's going to expand lithium supply. So there's more
Yeah.
supply coming on, but there's not enough mining supply to get to the 20 times the market by
Yeah.
2030.
Yeah.
So, Tesla's talked about doing some like unique things of extracting from clay. And so if they can prove that out, then maybe that's a way to avoid the mining constraint. But if the mining constraint does persist, then I think prices are going to go up, and that's going to be putting a lot of pricing pressure on like Tesla and on the end customers, honestly.
Yeah. Yeah. I wonder if they'll give some kind of update about that on Investor Day, or if anyone will ask them about it. How are they doing with their, they outlined it first on Battery Day, right? But they haven't really come back to it, I don't think, since, or talked about it since much. So yeah, we'll see if they can separate the lithium from, what was it, the clay or the salt, or I don't know. There was some
The
kind of,
clay. There's like
there was
lithium
some kind of,
extraction from clays, and they've
yeah,
they've got that processing plant that they're building in Texas right now. But the mining constraint is the one that seems most unanswered right now. So, but that's probably
yeah.
part of Master Plan Part 3. It's not like they haven't thought of this,
No,
but
they
we're kind
must
of
be thinking
guessing.
about it. Yeah,
Yeah.
they're ahead of us. Yeah, they've been thinking about this for a while, so you'd think they have some
Yep.
options. Buying up, lithium mines ahead of
Yeah.
time before GM invested in it and such. They would have,
Yeah.
Tesla
Well,
would be
and
ahead of them.
they did have a deal which I somehow missed with Piedmont, where Piedmont is supplying a huge amount of
Mm,
lithium 2025.
yeah,
So they're good for the next 2.5 years, but 2026 and beyond, there's real questions there.
yeah. Cool. Well, I see Farzad on the chat as well. How you doing, Farzad? He says you're the Mega Pack King. You are, Matt, the Mega Pack King. And he
Oh,
says, Farzad,
don't call me that. I'm gonna get attacked by the trolls on Tesla who are, or on Megapack, who are very defensive about their status as Megapack kings.
I don't even know who they are. They blocked me for some reason. So,
You had
yeah,
the right call with them. You're like, I'm just not going to interact with like any like nameless Twitter accounts, and that was 100% the right move.
yeah, yeah. It's funny. It's like you get blocked so easily. I never used to get blocked when I had like a few hundred followers, or even when I had like 5 or 10,000 followers. It was not often. But I'm like the same person. I ask questions of people. I try to, I'm not like hurting anyone's feelings. I don't think. I'm just being critical, asking critical questions, or making constructive feedback. And I get blocked by people now because I have more followers. So it's funny how, the more followers you get, the more sensitive people can get to whatever constructive criticism or concerns you bring up. They'll just block you instead of wanting to have whatever concern you have amplified because you have 50,000 followers. But if you have
You're
a
an
few hundred
idiot.
followers, they won't even block you. They just don't. They don't want other people echoing concerns of whatever you have.
It's true. Yeah, they're I
Yeah.
don't. Yeah, I tried to give them the benefit of the doubt, but like they're not interested in an actual debate or like trying to get to the truth. They say they are, and then they don't actually engage. They engage in like name calling and just like really
Mm.
bizarre things. But like
Yeah.
the focus really should just be on the analysis, and
Yeah. The
unfortunately,
source. It should be on the
for some people,
source.
it's not been. Yeah,
Yeah, the focus should be on the source, not commentators with biases. We all have biases, but we should just go to the source and
yeah.
talk about the source of whatever the debate is about. Anyway, that's it for this week, guys. Hopefully we'll be on next week. We will be on next week. And we'll see where the macro market's going. I think we'll have the what day is the CPI next? Is it this week or next
I think
week?
it's
Next
Tuesday.
week. Yeah, so we'll have the CPI number then already by then. We'll see how the market reacts to that. Powell, part of I think the reason the market's going down, I saw, is Powell has been commenting on the labor market and says that further rate increases will be needed if the labor market stays as strong as it's showing. So I think people are giving. If I'm a macro market, decision maker of where I think the macro market's going, based in deciding on how to allocate trillions of dollars of a pension fund into equities or not, that would give me a little bit of hesitance and be like, well, let's wait for the next jobs report number now too. So not just the CPI prints. It seems like the next jobs number, we're going to be rooting for it. If you're an investor in equities, you better be rooting for it to be very bad. So if it's very good, then the market's going to crash probably, because it's like, oh no, Powell's going to raise rates, an extra 50 or 100 basis points than he otherwise would have now.
Can I just say how ridiculous this situation is? Like
Yeah.
inflation, the inflation numbers are coming down. The Fed has a dual mandate to control inflation and unemployment, and they're like, "Well, inflation's down, but unemployment's too high, so we better smash up employment." It's like, aren't you happy with both numbers now? Shouldn't you just like
Yeah.
pause? They're like, no, people are earning too much money. I want more people to lose jobs.
Yeah.
It's just
Before we can pause
it's
rates. Yeah.
it's crazy. I
It's
just think this whole
crazy.
thing is so messed up.
It is very, yeah. So I don't know. What do you think? All right, one last thing. What do you think is the over under of when we have to stop being so hyper focused on everything Powell is saying and every data point? I mean, there's always going to be some attention to those numbers, right? But when do you
Yeah.
think we can stop being hyper focused on it for the whole market going up or down 2 or 3%, or like it has today? You know, it was up 2% and now it's flat, or it was even down. So it's like there's wild swings just from Powell just giving a talking at some economic club, So when do you think the over under is of when we have to stop worrying about that is going to be? Is it going to be
Um,
6 months
I
from now, a
so
year from now, 2 years from
I think
now, or never?
maybe it has a half life. So maybe we're paying half as much attention to it 6 months from now, or like by September is kind of what came to my mind.
Okay.
And
Okay.
then maybe like 8 months after that, we're paying like half as much attention again because things are just like mostly normal.
Yeah.
I
I
guess that
hope
would be
that's the
my answer.
case.
And then
I think that makes
18 months
sense.
from now, we're kind of back to like where we were in 2021, where it's like unemployment's unchanged and inflation is unchanged, and so you just don't really
Yeah.
care about it that much.
Yeah.
I don't know. How about
Okay.
you? You thinking about it any differently?
Yeah. I think best case is, you know, 6 months from now, they'll start lowering rates. And yeah, I don't know. I think a year from now is my over under of when we'll considerably pay less attention to it. Maybe that's my half life 50-50 is a year from now. Yeah.
Okay. All right.
Yeah.
Do you have any dad
So
jokes for us today?
oh my gosh.
There's one in the comments if you don't, but
All right, read the one in the comments. Where is
all
it?
right. So from Adam Clark. So what did the triangle say to the circle? You're
You're
pointless.
pointless. I knew that one. Why did the
It's not a
chicken why did the chicken cross the playground?
I don't know why.
To get to the other slide.
Okay. I can safely roll my eyes at both of those, which I think
Yeah.
is the point.
We'll end it on those jokes. I'll try to be prepared with a clever one that's, funny for dads and kids next time. All right.
All right.
I'll see
Thanks
you guys
everyone.